Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar was mixed following an upbeat data release early Wednesday. Data from the Australian Bureau of Statistics on Wednesday showed its monthly consumer price index, or CPI, it rose by 7.3% in the year to November, entirely reversing a surprise pullback to 6.9 in October. A closely watched measure of core inflation rose by an annual pace of 5.6 in November, picking up from 5.4 in October. Following the CPI data, Australian retail sales rose to record levels in November, driven by consumer appetite for Black Friday sales. Retail sales rose by 1.4 on a seasonally adjusted basis in November, crushing the 0.6% forecast. This followed from a 0.4% increase in October. Moving forward, eyes look towards the next big market mover, which is the closely watched US Consumer Price Index, or the US CPI data, due at the end of the week, which could offer some clues on the US rate path. That is, to see if the inflation showed further to a pullback from its previous 7.1 in November, with the forecast seen at 6.5%. Looking at the Australian dollar, the market still remains somewhat hesitant towards that level of 69.45. Nevertheless, the technicals are firm. I feel that a break above there and a close of New York would give us further confirmation to a potential target of 71 cents. Looking to the euro, the market is still somewhat lackluster after breaking above the 107.20 level. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, was relatively quiet following the US Federal Reserve Chairman Powell's speech in Stockholm. In his first public appearance, he felt interest rate hikes had been unpopular in an attempt to lower record inflation. However, as global markets hang on every word from the Fed, investors anxiously await now this week's market mover, which is the monthly inflation figures on Thursday US or 12:30 a.m. Sydney time on Friday, which could offer more clues on the rate path. As I mentioned, the forecast holds around 6.5%, with the November seen at 7.1. Traders are betting on a 25 base point rate hike at the Fed's coming up policy meeting in February. Looking at the technicals though, with the close recently under 103 for the dollar index, which has revealed the path to 101 to 102, may give further gains for the euro, and that is heading up towards the region somewhere around 108 to even up towards 109. Any pullbacks expected to be shallow, and my call will be negated if we see a break of 106.45. Having recently rejected the top side level around that 134.70.90, all eyes have been on the downside to the potential call of 130.40.60. I feel that the current slight profit taking coming ahead of the US CPI figure is likely to be reversed, and therefore still expect to see further down tests for dollar yen, with that support level still remaining at 130.5 as mentioned. The pound has been a little bit somewhat lackluster, but still holds to a potential target of 122 that could extend to 124. In light of the technical pattern, I do like the way it's shaping up, and confirming the bullish or the engulfing candle does support the target to the top side call, with any pullback likely to be shallow, with support seen mine at 121.25 or to 120.70. After two attempts to that top side, there has been some hesitation when we look at the target of 1,882. And if this continues, we may see eventually a little bit of uncertainty to the top side challenge and look back towards 1,857 to 58. The market is possibly looking this way due to there is some divergence and we are overheating on the ADX. However, let's not abandon the top side, because a break above 1,882 would give further scope up to 1,900. Wrapping up with oil, the market still remains somewhat hesitant towards that top side challenge, seen around $76.20.30. And while this contains any further advancement, then we may see this pullback to eventually reach the target of $73 or down to 71 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report and I hope you enjoy the rest of the day.